Hi everyone,
Everyone, welcome
welcome
back
back
to
to Infinity
Infinity.
Wealth. Oh mate, it's been crazy. I'm telling you. Like, oh, for God's sake, the I want to
I've got my
sincerely.
gun ready to shoot you,
Yeah.
mate. Put your hands up. Call yourself an IT guy. Go on, dare me, dare
Oh,
me.
I'm telling you, mate. I think I need that water with all the stress
Oh
I've gone
man,
through.
I
Man.
can't.
I'm a,
What? Yeah, just tell everyone how long we've
yes.
just been playing around this
Oh
stupid
God, I think we've been at this for 2 hours. Honestly, the sound. So we've had so the
internet problems.
video was fine. The sound, there was like three echoes, and there was all this background noise and all this nonsense, and it just was not working. And the weirdest thing is yesterday it was working fine. I tested it, but for today it just didn't want to have it. And I've got a feeling it's something to do with the internet. To be honest, my
Yeah,
internet's been absolutely rubbish.
yeah.
So if you're on Virgin, I'm pretty sure you feel my pain. And yeah, so again, so sorry. So what we're gonna do, we're not gonna get you guys to miss out on this. So we thought, okay, let's just pre-record this. We've got some fantastic questions in from the audience that already the ones that they've got their questions in. So we're going to answer those. And of
Yep.
course, if you have more questions, and I know you definitely would have after listening to this conversation, just drop them in the comments below, and we will get them answered, and we will do another video to answer those questions as well. So again, so sorry, but apart from that,
Yeah, everyone blame Kiki and get your guns out.
unfortunately, yeah, I do take the blame. I do take the blame. But yeah, so should we get into it? Otherwise, let's
Yeah,
let's
let's
crack
get
on
into
with
it,
it.
mate. I
Yeah.
mean, come on. We spent 2 hours trying to fix this bloody thing. That's right. But anyway, listen, that's life,
Yeah,
isn't it?
exactly. There we
And
go.
one of
There
the
we.
things with life is that you need to adapt. What do we say? You need to adapt.
Yeah, yeah.
So
You
we've adapted.
either you learn, you never lose. You win or you learn. So
Exactly, mate.
it's
Exactly.
cool. So today's talk, live talk would have been about Martin talking about money in, money out in the stock market. So we
Yeah.
all know the sort of basic principle of money in, money out in property, and I think Martin will elaborate on that. Just not necessarily elaborate, but I'm pretty sure a lot of us know. But if they don't, Martin will give a brief explanation on what MIMO is. But how do we then look at that from a stock market perspective? And that's what Martin's great insight is going to be all about today. So I'm
Yeah.
not going to take the light. I'm going to give the limelight to Martin now because this is his expertise, and I'm going to let you take it away.
Okay. Well, look, when we talked about, when I said to you, people are missing something, can you remember
Yeah.
when we got on that? And then it wasn't until a couple, I think about a week ago, I thought, hang on a minute. Yeah, there's another way of looking at it. And I think I need to tell people about the other way of looking at it. And I explained it to you. You went, wow, I think you should tell people that, because I'm
Yeah.
sure that people don't think of it that way. So before I begin, right, what I'd like to do is, I know that we get a mixture of people. So I'm going to share my screen. It's going to just be 2 slides I'm going to talk about. And that is, so the first one, let's have a look. Let's have a look, here we are. And I will go to slideshow, begin from current slide. So what's money in, money out in stocks? Okay. Oh, no, hold on. That's money in, money out in property. Sorry. That's where we need to begin, right? Because most of you guys know about property and how it all works, okay? So, when you're doing a money in, money out type deal in property, you basically are buying a distressed asset in property. Then you're spending time in doing it up. So refurbing it or adding value, maybe doing an extension, loft conversion, all sorts of things to add real value to it. And then after you've done all the work, what you're doing is then refinancing it. So, in the UK, we've got something called a 6-month rule. I know that other places in the world, you could just refinance it, put it back on the market as soon as the work is done. So in the UK principle, we're looking at maybe 6 to 9 months. Why I say 9 months is because it takes a bit of time for the mortgage lenders to actually pull their finger out and start doing the valuation. So Once you've refinanced it, you're able to take the money out that you bought it for. So to give you an example, right? A very, and by the way, guys, you know, if you're property people, some of you may know this, some of you may not even know this, right? So let's say, hypothetically, you had a property, you know that the done up value or the end value, so if it is in good condition, it would be 100,000, right? So you've got a property on this street, you know that if it's in good condition, you're going to spend about 100,000, or it's going to sell for about 100,000. Okay. So now you found one on that street, which is looking tired, or it's got a, yeah, it just basically needs some money spent on it, bringing it up to date. So what you do is, in the UK, yeah, we've got mortgages of 75-25, which means that you put a deposit down of 25% and the bank lends you the balance of the 75%. Now, in other parts of the world, that ratio can change. Doesn't matter, the principle is still the same. The value that you purchase it for will need to change depending on the ratios that you're working with, okay? So let's say hypothetically, you're in the UK, you know the done up value is 100,000, right? You've got a 75-25 loan to value mortgage that you'll be getting. So you really need to have the property at £75,000, including the cost of doing it up, right? So what you do is say, the amount of money that I've put into this deal, in this property, has to be no greater than £75,000. So it can be, you know, all your solicitor's fees and everything else, but I've tried to keep it simple here. So your the amount of money that you put in is 75,000. So let's say you spent £10,000 or dollars or whatever it is in doing the property up. Okay, so you would really need to buy it at 65,000, because you're going to refinance it at 100,000 with a 25-75 loan to value. So thereby getting your original amount back. So your original 75,000, which comprised of £65,000 that you bought it for, and the £10,000 which you spent in doing it up, or your solicitor's fees and everything else. Yep. So that's basically that principle. Kiki, you get that principle, right?
Yeah, 100%.
I've explained it good. Okay. All right. So let's then move on to stocks. Okay. Now, one of the things that you need to make sure, it can happen over a period of time, but really to get the maximum that you want to get is you have to look for markets which have maximum pessimism, right? Or are at extremes because you're going to buy it, right? So stock markets, unlike the property market, stock markets gyrate quite a bit, right? So they have they have corrections, and these corrections can sometimes be 10%, 15%, very much depends on, yeah, and they obviously have crashes as well, which can go down to 20-25%. Okay, but the market is always in flux, so it has a little check-in to come back to certain levels. So in this current example, you know, we looked at the UK stock market and world stock market. So what was happening was the US, the stock markets were already rising anyway, but the FTSE 100 was taking a bit of a nosedive. And the reason why it was taking a nosedive is uncertainty about Brexit, all sorts of things, right? And all of a sudden, you know, the FTSE is no longer in favour. It's rubbish, and all the stocks, you know, are not valued very much. So what you're looking at is finding stocks which are oversold, basically, right? So oversold, there's various ways that we use to measure oversold conditions. That is using moving averages, MACDs, RSIs, all sorts of things. There are loads and loads of indicators, right? But the main one is, you know, how far is it deviating from the 50-day and the 20-day moving average, right? Because we're looking for slightly longer term, right? So we're going to try and pull some of our money out. So classic example is BP, right? So at the beginning of the year, if you looked at BP price, I think it was over £4 something, or even £5 actually. BP then started coming down in value because oil was dropping. The BP share price is very much related to the price of oil, as you can imagine, because that's how they make the money. Now, at that time, everyone wanted all electric cars, right? Planes weren't flying. When planes weren't flying, cars weren't driving around, right? So all this was going on, basically. So what I did was I realized, if I can just undo that for a minute, and let's just bring up the share price of BP. By the way, Kiki, you're buzzing. Is that okay?
Am I?
Yeah. Okay. I'll just talk about BP. Yeah. So here is a year's price of BP. So you can see at the start of the year, right, 2000, it was £4.80, over £4.80. Then gradually, as COVID struck, BP just smashed through the floor. And the reason why it did that was because everyone felt that, oil demand was going to go down. The planes weren't flying because everything was grounded. Okay. And then it took a bounce up after people realized, oh, it's been overcooked a little bit. And then, slowly it started coming down again. Now, I didn't actually get a chance to buy it here. I should have bought it there, but I didn't buy it there. Because at that time I wasn't really concentrating on that. I was concentrating on other things. All of a sudden, it took a vicious bounce, and then we had this slow grind all the way down. And that grind is because everyone was bullish about EV stocks. All of a sudden, petrol cars were no good, diesel cars were no good. Everyone was going to move to electric cars, and everyone's talking about alternative energy, which I'm a great believer in. But at the end of the day, you've got to have a look at these sort of things. So I started buying in. So if we do the 3-month chart, yeah. So you can see how it went all the way down to 190. Now, when I was looking at it, I actually had a buy price at £2. I knew that it could go lower, but I always knew that. But it just did not make any sense at all that this stock was at this value, right? So I started buying in. So I bought in 4 different tranches. My average price, I think, was about 195. And then I just, within a few weeks, so that was at the end of October, right? We're in December now. Within a few weeks, look, here we go. Within 3 weeks, it already shot up to 250, right? So, I didn't know the vaccine was out, but I knew that there will be something out, and people will come to their senses. Okay, so I'm just going to go back to my. So those 4,000 shares, I bought at 195. Okay, average price. So that cost me. Now, guys, remember one thing: whether you're in the UK or whether you're in the US, governments around the world want people to actually have share ownership. Okay, one of the ways they try to entice you to do that is by giving you incentives where you don't pay any capital gains tax, and if it's in your pension, or what do the Americans call it? I've forgotten the name for it now. I did know it. It just popped out my head.
They have the ISAs as well.
Yeah, the ISAs. So I bought this in my ISA, right? So £7,846. That's how much it cost me, right? Within about today. So today's price, it actually shot up to 285. I've got a target price of this particular one at 350. Which I can show the reason why I've got it at 350. Where are we? The reason why I've got it at 350, if we go to the year, you can see here that there is going to be resistance around this sort of level, right? There is a gap fill here, which I think it will definitely fill that gap, right? We're in this bullish mode, so it could well go up to that level as well. So just going back, today's price, based on today's price, it's £2.85. So that makes my share value at £11,400, which gives me a profit of £3,554. I hope you all get that, right? So what then you do, the numbers and the reverse number calculation that you have to do, is you have to, the 3,554, you divide by the current price of that share, right? Which will then give you the amount of shares that you need to actually retain, okay? Which is 1,274 shares, right? You sell the balance, so if you can do the calculation yourself, you sell the balance from the 4,000 of 2,750 shares, which will bring you back to the amount that you invested, thereby giving you free, you've got 1,274 shares, which you paid nothing for. It's in your ISA. These shares are giving you a dividend of 6.4%, and they're going to be going up in value. Why did they go up in value? Well, I explained to you before. I'm just going to show you a graph, right? See that, Kiki? Kiki?
Yeah.
Yeah?
Yeah.
Right, okay. So you're not falling asleep on me, man, are you?
No, I've got it on mute just in case it's buzzing.
Okay, all right. Okay, so basically, stocks go up. You see corrections all the time, right? You see corrections in the stock market all the time. Just unlike property, stocks will actually move very, very quickly. Okay, so I've managed to find stocks against property with the recent graph. So 2000, so you can see where we are now, right? So this was only a few weeks back, which is great, right? So you can see that generally they because it's all related to the economy and everything else, they go up, right? Stocks go up. So it's not voodoo science, it goes up. Just like property goes up, stocks go up. There are deviations when stocks are well over, they do come back to correct. If stocks are too far below, they do come up to meet. Okay, so you can see that, which is why a couple of weeks ago, I said to everyone, you got to be mad to look at property at the moment because there's more opportunities here. Hypothetically, if you had some money put aside to buy some property, and you know it's quite hard getting deals out there because property prices are still on the rise a little bit, right? So what you want to do is, actually, I want my money to work harder for me, okay? So you can put it into an ISA, you bought some shares, you've seen where it is right now, you bought some shares, and now all of a sudden, you can actually take the money out that you invested and leave the shares that you've got, right? In the BP case, the 1,200 basically shares, right? Okay, so I'm sharing that screen. Where is it? Okay, so I'm going back. Yep. So those shares are free. Now, that is money in, money out. That is exactly what money in, money out is. But there are a few advantages and a few disadvantages, right? The advantage of property is obviously there's gearing. So, you know, because you're buying it and the bank's loaning. Now, the downside of property is that, you know, if your property value falls below the price that the bank are lending to you, 75,000, say it drops to 65, you have to make up the shortfall. This situation, there is no shortfall because you've got them for free. You always decide when to sell them. Now, I have a break-even point. So even though it's £2.85 right now, if that share was to ever go anywhere near the £2, and I keep raising it, right? So I would raise it 25% below, right? And I would do a trailing stop, and I would just make sure that I'm just riding it out. 25%, why? Because it's already well over 25% now. And I need wriggle room to let it breathe, right? Because I want to try and keep it as long-term as possible. So I hope you guys got that, and I hope it's blown your mind, really, because a lot of property investors, unfortunately, like I said in Richard's meeting as well, they're very blinkered. In this day and age, you've got to learn to adapt. You have to, you know, people talk about financial freedom. I'm not a great believer in financial freedom. I'm a great believer in financial education, because financial freedom just means that you're going to be bloody lazy and do nothing. Right? Financial freedom means that you can use the money to your best advantage to get the maximum returns out of it. Right? So this is showing you, you've got that. And do you know what? You do how many times? Okay, it will take you a long time. It's a slow process. If you've got larger money to play with, obviously you can buy a larger amount of shares, right? So that's basically it. I hope that you've got the gist of that. Do you think I've explained it well enough, Kiki?
Yeah, I think to be honest, this is like the first time I'm properly hearing you speak about it as well. So it wasn't like a concept that we spoke in depth about.
No, no,
Like,
no.
you know, you spoke to me about the idea of speaking about it, and I was shocked straight away. I was like, smart. I was like, I like that because the reality is like, just to add to your point as well, where you were saying that, you don't, not only do you don't want to be this one trick pony, but also on top of that, even in the profession you are good at, and if you're a property investor and you're good at property investing, that's what you do. Utilize the skills that you have. They're transferable. The investment skills you have, that this is you sitting there thinking, okay, I do money in, money out property deals. Why can't I do money in, money out elsewhere? Why can't I apply the concept? Why can't I have a perspective like that on other investment vehicles and opportunities and all sorts? And I really like that. And I think that's a valuable lesson for a lot of people to watch this. And man, this would have been such a great live stream. I'm so gutted because, again, I'm pretty sure because a lot of people,
a lot of questions.
Yeah, we would have had a lot of questions for sure, and I'm pretty sure we're going to have some questions in the comments after this. But the value in this is just understanding that this is just one concept.
Yeah.
Imagine how many other concepts. If you're a property investor, business owner,
it's like all my life I've always, because you're in business, I'm always looking at different angles, right? And I'm quite a creative person anyway. So one of the things that I did years ago, before anyone even, was borrow money on credit cards. Now, hold on. I'm not going to say recommend people, because you've got to understand certain things. I buy assets, right? I do not waste money on frivolous things that are not going to go up in value.
Yeah.
If I'm borrowing money, I'm going to borrow money to buy assets.
Yeah.
That's it. Basic, plain and simple, right? I actually had 140, 150 grand's worth of credit card debt because I'd bought a couple of houses on it, and I was paying 0 interest because they were 0%. Yeah. My wealth was growing. My wealth was growing because I wasn't paying any mortgage.
Yeah.
And this is way before anyone. In the 90s, Kiki, I was doing this shit.
Yeah.
Because I figured it out. I thought, you're going to give me money for free. Yeah, you're the idiot. I'm not the idiot. I'll take it. Now, having said that, recently, I heard of a guy in Germany through a friend of mine, right? He actually was getting a loan from one of the German banks, which was unbelievable. The interest rates in Germany are less than zero. At 0%. 0%, I think, for 10 years. 0% for 10 years. Right? So he took that money from the bank. I think it was about 100,000 euros. No, it was €1 million. Sorry, €1 million loan for 0%. Took that money, and then he's invested that money. He's invested it in a safer vehicle, but one that just gives him, so it's almost like a bond, basically, right? So he knows that he's going to get money back, basically. Yeah. Right? It's the same thing. There are lots and lots of opportunities out there that people are just missing. And the whole point of our channel is to wake up a light bulb, something in them to help them.
Yeah, exactly. 100%. And again, I just love the way you put that concept into stock. And I also wanted to add to that as well. It's similar to what, not necessarily taking all my money out, but I've got a strategy. My investment strategy is a bit different. Funny enough, we've actually got a question about that. But so when I'm investing in stocks, I've got obviously stocks which are riskier. So some of them I will take off profits because I've made money, and then I'll reinvest them into commodities, into more safer stocks, which I know will give me better good dividends, will give me better returns, more safe. Like you obviously have to know if you're investing in riskier stuff, you're luck or your chances are not always going to be there. So you have to understand what you're investing in, what you're risking.
Yeah.
But when you are making good profits, when like this flash crash that happened in all the stock market,
and it will happen again, Kiki.
Yeah.
Again.
Oh yeah, 100%.
The stock market, I think at least once a year, right,
Yeah.
will have a drawdown, right? There will be a correction.
So,
and that correction can be anything from 10 to 15%, sometimes 8%. It can vary, right?
Which is massive. Huge. I mean, for you to make, again, because you know the market's going to come back up to that point. There's no way it's not going to, right?
Yeah.
So I made a lot of profit during that period. So what happens is it just gets reinvested. So all of a sudden I've made this money out of nowhere. I'm reinvesting it basically. So it's a very powerful tool, and talking about it in this perspective is very, very powerful. So again, I'm just so gutted that we're not on live, but instead what we've got some questions that came in, which is really good.
Sure.
So you know, we said to people, please do send us some questions in pre-hand, because we can't guarantee we're able to answer all of yours on the live. But if you guys have any questions after this obviously after hearing this, drop them in the comments below. We will answer them. We will make another video to answer those videos. So are we ready for the questions? Are you ready?
We are. Oh.
Okay, so the first question from someone was, what's riskier right now, property or stocks?
Oh, right now?
Yeah. I think what's riskier right now? Right now was the question. Property
right now, I would say property carries more risk than stocks, right? Right now. Yeah. I know that people have this fear of stocks because they remember, or they see the headlines: crash, stock market's crash. You know, when I see that, I'm on my phone going, "What the hell can I buy?" Right? What the hell can I buy? That's what you should be doing.
Exactly. Yeah.
Instead, they're going, "Oh, stock market crash. Oh, because bad." I'm like, buy. Right. What am I going to buy? Yeah. I want to buy something safe. I want to pick a buying point. I want to pick this. So I would say the reason why I would say that property carries a bit more risk at this moment in time is mainly because of what's going on with COVID, right? So, you know, a lot of people around the world have been living on loans and things like that from the government, furlough loans. In the case of the US, you know, they haven't even written that bloody bill yet, right?
Yeah.
They haven't even bloody well written that bill. And I think if they don't write it in time, I think they need to slap that market down a little bit if they haven't written it, right? But it's that basically. That you just need. So let's say you bought a property, you've got some negativity coming, right? You've got some negativity coming. At the moment, property prices are supported because you've got an undersupply of houses, right? So if I was to go into property, I'd probably try and pick commercial with a conversion in mind. With a conversion in mind, because I feel that I'm picking up cheaper, right? And I'm trying to mitigate risk. We're always trying to mitigate as much risk as possible, but there is always risk in the market, whether you buy a house or whatever you do. There's always there's no gain without risking something. It's impossible. Those people who say there is, it's bullshit. You know that, and I know that.
Right? Yeah, definitely.
So I would just basically say, for me at the moment, my view is that it would just be property. That's not to say that the stocks won't have a 5% correction. Don't get me wrong. That's not to say that the stocks won't have I mean, I'm waiting to see if it recorrects a little bit more now. So I was hoping, to be honest, and I got it wrong. I thought after Thanksgiving, normally the market slows down. And it didn't happen. So it's had it's still young, so I'm hoping it does happen, but I'm not 100% sure. But it might happen in January, right?
Yeah, it'll be interesting.
This is overextended.
It'll be interesting. I mean, our eyes are always going to be peeled out for it anyway. So everyone will know when we know.
Yeah. They'll be going, "What are you going to buy? What are you going to buy?" They'll be emailing me, What are you going to buy? What are you going to buy?
Exactly.
So yeah, that's what I would say, Kiki.
Cool.
Oh, actually, can I share something else?
Yeah,
That's a good question. It's just suddenly.
Yeah. Go for it.
Okay. Yeah. By the way, we don't rehearse any of this shit.
No.
We talk off the top of my head. Okay, here we go. Right, listen, mate. You talk about that's a very good question, and it suddenly just dawned on me. Okay, you know what that is? That's a UK house builder, right?
Are you? Oh wait, we can't see our screen. Share it again.
Oh yeah, sorry, mate. Yeah, I forgot about that. Here we are. Where are we? Share scheme. Okay. Okay, so I'm going to go through a couple of UK house builders, right?
Yeah.
The house builders are leading, and they're going to tell you what's happening. Okay, so the house builders had a big crash all the way down. Now they've had a nice bounce. They're on their way back down again. If you look at a 3-month chart, month chart. Yeah, they're beginning to move down again. So that's Barratt Home. You can see Barratt Home is luxury, right?
Yeah.
But it's beginning to move down. So let's have a look at 6 months, a year. So Barratt Homes is basically flatlining and beginning to move down. British Land. Now, I wanted to buy, but the thing is, I don't buy home builders or because I already own property. I want to diversify, right? I'm not going to buy a property stock when I hold loads of property anyway.
Yeah.
I use it. So if you are young, right? If you're young and you haven't bought property and you want to get into property, these guys come and pay dividends, right? Another way of getting into property, basically. So you can see it's flatlining there as well. Persimmon, same. I'm anticipating these guys actually coming down. Yeah, I'm anticipating Bellway. I'm anticipating them coming down, basically.
Yeah, they look it.
Yeah, so it'll be interesting to see Red Row. It'll be interesting to see where they go. Yeah. Sorry, I'm just gonna. So that was actually I've just thought of that. I didn't,
Yeah, it's good. Good, nice entry.
Yeah.
Perfect.
Okay,
cool.
What's the next question?
So, the next question is, 1 second. Okay, so is investing in oil dead? You've been talking a lot about EV cars. Is most of the demand for electric cars right now? That's an interesting question.
That is an interesting question. Yeah. What do you reckon? You want to answer a little bit of
that?
Yeah,
I mean, I think, you have to look at this from a very practical perspective. Like, I quite like this term of scratching the surface. That now, oil's not going anywhere. Or planes are still going to be there, right? We're not going to all of a sudden get electric planes and all this kind of stuff. I understand and I get there is going to be a demand shift, and it's already happening in terms of the demand for petroleum, oil, diesel, all these things, because the cars are moving towards electric. Even the UK government are doing schemes and all sorts of stuff to basically get everyone moving towards the electric space. I understand that, but at the same time, we cannot ignore the mass use of oil, basically in airplanes, in many vehicles, in many manufacturing plants, and all sorts of stuff. So I wouldn't say that the demand is dead. That's not what I would say. I would definitely say it's reducing, but I still think there's years left in it, to be honest with you. And I don't think from an investment perspective, I mean, we saw what happened to oil. If you thought that was the end of oil and it went negative,
that would be a great time to buy.
Your BP example is perfect.
Yeah.
Perfect.
But the other thing a lot of people are missing, right, is I think we talked about it. Because I took my father into Moorfields. You remember?
Yeah.
So so give you a classic example. I need to take my father to hospital. Took him to Moorfields, and we drove in because of COVID. I didn't want to. So the traffic was a bloody nightmare, right? Coming back. Main reason why is because people don't want to take transport, which is understandable.
Yeah.
Sadiq Khan, the London mayor, has not bloody well helped us at all, right? He needs a good slapping off. Doesn't he?
We don't get political, Martin, but yeah.
Okay, all right. So we're not political channel. Yeah.
All good, all good.
Anyway, right. So there's more people actually driving than taking transport. The
Yeah.
other thing is, okay. The other thing that people haven't thought about is that once COVID is lifted, and people want to fly. Kiki, you want to go on holiday. So every youngster, I'm also a youngster. yeah. But every person that I've spoken to wants to get away, wants to go somewhere, right?
Yeah.
And what you'll find, and this is an interesting question actually, because when I was doing the IMM meeting, one of the questions was, would you buy EasyJet? And to be honest, I hadn't looked at the EasyJet chart at that time, and then I looked at the EasyJet chart after that. I thought, oh, okay, well, EasyJet's had a huge, quick rise as well, and I'd said I'd probably short EasyJet. And then I think about a lot of stuff. I don't just make a rash decision. I actually deeply think about stuff. And then I thought, okay, well, I'm not going to buy EasyJet because at the end of the day, it's linked to oil, right? So if oil's going to do well, EasyJet's going to do well. But the other thing is, you'll find that there will be, all of a sudden, you'll get this, air travel has increased by 200%. Everyone go, oh, wow. So it's gone from 1 person to 2 people.
Yeah.
But you know what I mean? It's not. Yeah. So everyone will go excited by it. So that will drive up some of the prices as well.
Yeah, that's
that will drive up oil as well. But the other part of oil, which I think, and I remember this from experience, right? And that is during the financial crisis, a lot of people weren't investing in oil, right? So they weren't getting any money, so the oil rigs couldn't work. So they've all mothballed all the projects. They weren't looking for new oil. So all of a sudden, oil went down, and then slowly it started to creep up. If you ever followed oil, I can share my graph, but if you think it's worthwhile, I'll share it. But shall I share it?
Yeah, you can do.
Yeah,
it'll be good. It'll be good to get a perspective.
Yeah, let's see if I can get crude.
Yeah, I'll get crude.
Yeah. There you go. Like crude. It should be crude, not like crude.
Yeah.
Right. So
click share screen.
Check that out.
Click share screen.
Oh shit.
on your Skype. Yeah, you gotta switch it. Remember?
I keep doing that. It's my old age. It's my old age. I'm not. I'm young, mate. I'm young. Okay. Right. So can you see that?
Yep.
$142 a barrel.
Yeah.
Financial crisis. This is where we were. Right. 52. That's where we were.
Yeah.
Financial crisis. Before 2009. Yeah. And we were still in the middle of it. Can you remember?
Yeah.
What did oil do? What the hell did oil do? And we're in a financial crisis here.
Exactly. That's a perfect example.
The reason why it did that is because people couldn't invest in it. They couldn't get the loans, so the drill machinery went down. All of a sudden, there was a shortage. Yeah, and because there was a shortage, there was no inward investment. That shot up the price.
Yeah.
What we've done today is because we've got different types of oil. We've got shale oil. So we've got North Sea oil. You've got different types of oil, right? Deep sea oil, and each has a price unit. So in the States, they've done a lot of fracking and shale oil, like the Canadian shale, and that all had to stop because their break-even point is $50. I think it's $50 a barrel, right? So they obviously thought, well, I'm not digging it out the ground because it cost me 50. So unless the price goes over 50, I'm not digging it out. So we're going to mothball it all. And a lot of companies, that's why a lot of the companies mothballed stuff, right? Because of that mothball, I'm anticipating oil actually going up. And I'm expecting it to catch a lot of people out, right? Based on that logic. Now, I'm not saying, I could be wrong, right? But based on logic and my gut feeling and what I see and what I have known and learned from all those years is that that's going to go up. Yeah. which is why I looked at BP, I looked at all the oil majors. Already Goldman Sachs is saying that BP is undervalued. Of course it is, right? It will be great for the the shale industry as well. They'll get back to it. But the other thing is there is inherent. They want oil to go up. When I say they, it's the industrial machine, right? All these guys need oil to be up there. Do you know why? Because the banks have lent shitloads of money to all shale oil companies. And when oil drops, banking shares drop, right? Because they could be in financial trouble because they've lent all this money to these shale companies and they can't actually dig anything out. Right?
Yeah, exactly.
So that's that. That's the end of that. So I hope you enjoyed that. But yeah,
that's good. That's really good. I think that's a good. This is a good
all this free stuff that we're giving them, man.
I know.
I need them to share stuff. Look at the stuff that we don't talk crap. We're spontaneous, right?
Yeah, we need it.
Share this stuff. Please share.
We need it, guys. We need just
bigger. Make our channel bigger. Or I'm growing anyway, but make our channel bigger.
Yeah, you don't need to donate anything to us. You just got to share our videos. That's it, mate.
Share our videos because and the other thing is we try to be entertaining, right?
Yeah, exactly.
We try to be entertaining.
Yeah, exactly.
What's the next question?
You're gonna like this next question. I've been like really waiting to ask this one.
Oh, shit.
Would you invest in an Airbnb IPO?
Okay. So, have you seen what Airbnb has done today? Because the IPO was today, yeah?
Crazy.
Right. 19 minutes ago, CNBC, Airbnb, 115%.
Yeah.
Yeah, 115%, right? No, is my simple answer. I would get into an IPO. What I find from experience is that the IPO, on the first few days, they shoot up. There's a frenzy. There's actually a frenzy of people wanting to get in, and they price. Then that frenzy dies off, and then the share drops down. And quite often in the last few, it's actually dropped below the IPO price.
Yeah, exactly.
So no, I wouldn't buy it right now. Do I think Airbnb is a good model? I'm not sure. I'm not sure. What about you? What do you think of it?
So on the IPO stuff, I completely agree. I mean, I was in I keep forgetting which one it was, Neo or Xpeng, when one of them IPO'd in August.
Yeah.
And same boat. I knew this company. I knew what they were doing. I knew that they were going to IPO, but I did not touch this thing until the first spike was up, and then we had the crash. Exactly what you said. It's a pattern with every single IPO.
Yeah.
It's very, very unlikely. Again, we're not saying that this will happen or won't happen. We're looking at the history and the majority. The majority of IPOs that IPO first, they absolutely shoot up. People are looking for a quick buck. The traders get into it to make a quick buck. Yeah.
Exactly.
And then they sell.
If you're last to the party, you'll get caught out.
Yeah, exactly. And we've all seen whether it's cryptocurrency, whether it's whatever it is, when something goes like that and people are buying at the high, you're going to get caught out. And if you're not in the mindset to be like, because the thing is, I'm seeing a lot of people saying, should we invest in a lot of property people as well? Because obviously it's a property related company saying, oh, should we get an IPO? Should we register? Should we invest? Blah, blah, blah. And the way these people are posting messages, that they're trying to get in just for a quick bang. The thing is, if you're going with that mindset, as soon as that thing starts dipping, your mind is straight away, shit, I should sell this. Oh, $4,000 down. Oh, $6,000 up. Fuck. I should, sorry, excuse my French. I should sell this. I should sell. And then all of a sudden you lost money because you're fearful, because you don't know if this thing. Now, if you're an investor and like with our experience, let the hype go. Let the hype people go. Let them do. Let the dust settle. Let the herd come in. Let the dust settle. And then come back to the market. But I can almost guarantee you it will come down below the IPO introduction price.
And the weird thing is, what I think how it will come down is because COVID is still rampant at the moment, right? Especially in the States. So, and it hasn't gone away. It hasn't gone away. So what happened is that everyone's got in the IPO, and then they'll, a few months go by, and then shit, COVID's still here because we haven't finished our winter months yet, right?
Yeah.
And they go, I think they've overdone it. And then it'll start down again.
Exactly.
But the
Well,
IPO is the IPO price was set above target, and that's the other thing I don't like. They're always setting
yeah,
IPO price
yeah,
well over target.
yeah,
And
exactly.
why have you set it at that stupid level? Because people are stupid enough to pay for it.
Exactly. That's the thing. That is the thing. It's so true. They know that people will get into it and people will buy it. Like, guys, it doesn't mean if it's a big company, you go and pay over the price or over the odds. It doesn't make any sense. You need to biggest thing. And I know a lot. And to be honest, even myself, investing in IPOs is one thing I always look at because I'm not looking at investing in IPOs, which on the day of the IPO, I'm looking at it when they dip again because I know obviously if a company is good enough to go public, they've got good revenue models, they've got good profitability, and they're making money.
Well,
Not necessarily profitability, but you want to look after this whole hype is done, 100%.
But a lot of people, you could get in on the IPO because they did actually phone me up a few times to the Airbnb.
Before
I
pre-market.
don't know if they phoned you up,
I had registrations with brokers, but I didn't get in because they also have minimum investment criteria.
Yeah, they did. But the thing is, so if you got it, then you'll get it at the set price that they released the IPO at, right? Exactly. And not the price that are going up, right?
Yeah.
And you don't know. What I've found in the past is that you don't know exactly because they ask you write a check to them, but you don't know if you've got all the full share allotment or not.
Yeah, exactly. Yeah.
What do I sell? And by the time you, that's happened to me in the past, right? And that's a long time ago, right? And that's why I just thought, well, I don't, it's gone up, and then all of a sudden it's gone down. Forget it. So I just wait. It's fine. I just wait now. I try not to get involved in the hype, like you said. What's the next one?
So I hope that answered that question for the person that sent that in. Good question though, really good question. This is interesting. What's the difference in Marttand style investing and Kiki style investing? That's an interesting question.
All right. You want to go first?
I'll go. Okay, cool. So my style of investing, I mean, as you most probably seen from the videos, I'm obviously I don't have as much responsibility as Marttand does. Whether that's family or everything else, basically. So I have a bit more of a risk appetite, and I'm a bit more like not. I wouldn't say like risky. I'm definitely still analyzing risk. So don't think I'm going out making absurd decisions and risking a lot of money without any. I'm making educated decisions on and analyzing my risk that I'm going in. So I would definitely go for some of my portfolio. I'll definitely go for stocks in most cases, which are like your Xpengs, your Neos, which are really picking up momentum, which are really hot and etc. But I understand when to get into the market and when to get out in terms of, if I'm trading on a short term or whatever. In terms of the longer term sides, I'm less on the dividend side. I'm not really investing in many because for me, I'm working on a certain objective of growing a certain capital pot. First and foremost is the most important thing for me. Dividend and stuff, income generating investments in terms of the stocks will come a little bit later for me. So, and then my third part of the portfolio is so it's like in three parts. Is the more safer company. So the companies that have been around for longer, the Microsofts, the Apples, the Teslas to a certain extent. The ones that are going to give you at minimum 2, 3, 4, 5% a year without any troubles, basically. The ones that are going up steadily. That's really on my style. So I definitely would say a little bit more riskier. I'm always looking for the companies that have IPO'd but the dust has settled, and looking for the ones that will spike up and go up. But I think that's what a lot of, a lot of youngsters are into that. Everyone wants to make this quick buck, but I'm on a very don't think I'm only on that, basically. I'm doing a very sort of balanced approach, but with a bit more risk. That's my style.
Okay.
If that makes sense.
Yeah, I have all the styles.
Yeah, you do. Well, to be honest, I learned my styles off of you as well. So
yeah, look, now you're right, absolutely right about responsibility, right? So I like, because I don't have as much time to constantly look.
Yeah,
at stocks.
that's a big one.
So, before I used to have like 7 monitors all the way around. But yeah, so yeah, now it's a case of, look, I'm investing it for the long haul, right? But I'm looking for opportunities. So I would say I am a very opportunistic investor, right? Be it in property, like you said, right? Be it in property, be it in stocks and shares. I am very opportunistic, like BP, right? So what I am looking for is that sort of thing. I'm looking, especially with all the tax stuff that's going on. So now I tend to buy it in an ISA, and then maybe hold it for a certain length of time. So I swing trade that way, because at the end of the day, I'm mitigating tax. I don't, I can keep it there. It's fine. So look at that. Then the other side that I do is obviously and I know people go, oh, spread betting, but you can, again, it's tax efficient, right? So I've got different accounts, right? So it's very tax efficient, but the spread is quite big, right? You've got to remember that. But again, I do hold positions for long, and I swing trade, but that is if I know that I'm not going to keep it for long, right? So give you a perfect example. If I look at a chart and I think it's moving, so I'll do the momentum trade, right? But I will then just jump onto it, but I won't necessarily use the I've got different platforms, right? So I've got CFDs and I've got those platforms. But yeah, so it's momentum trading, but I also like picking up stuff that's deviated from the moving averages quite a bit. So I'm a bit of a bargain hunter when I'm trading, and obviously when it's overcooked, I sell it. But one thing I have realized, and I can't, I have to stop doing this, but that is, I like shorting, but I shouldn't be shorting, right? Because things get overcooked, like Tesla, and it's absurd. And I'm not the only one, right? I'm not the only one, right? What was that guy from The Big Short? I've forgotten his name now.
I don't know his name.
He's already shorting Tesla, right? Tesla's valuation is absolutely absurd. I know that there's a lot of Tesla fans there. I know that, so it's not knocking Elon Musk or anything else like that. It's common sense. Nothing else. I'm just using and
put it into this, just to add to that, put it into this perspective. They only recently had a stock split. So that says it all, really.
Yeah, they had a stock split, and now they're raising 5 billion again, right? And they'll raise it quite quickly because there's a frenzy. So why not, right? But just on another note, have you ever heard of a company called ARK Invest? Very clever lady, but they invested in Tesla at a very early stage, and they've invested in other IPOs or other. They're a very techie company. They get in at grassroots level, so they do well, but they don't always do well, if that makes sense, right? Tesla is the biggest one, and I think she's been known because she picked it out, and because it did so well, everyone, I'm not looking her. She's a highly intelligent lady, but there is something about banging on the same drum. It doesn't happen all the time.
100%.
So I'm just waiting. I'm waiting. I think Tesla will come down. But if you're going to short Tesla, you would short it just before it goes into the S&P 500.
That's true.
You would. But so
and not financial advice.
No. That's the other thing. We have to always remit that we're not financial advisors. You should seek advice. And the other thing that I do, Kiki, right, is I've got 2 young children, got 2 young girls, right? So my wife and I, like any normal family, would put stuff away for them, right? So we invest in a couple of tracker ISAs, right? Well, they're not ISAs, but a couple of trackers that I think it's not NatWest. What's the other company? Golden Site. What? Nationwide. So they've got a couple of kids ones. So and what happens is that goes directly into a share account, basically. Yeah,
Nice.
a unit trust account, right? Because at the end of the day, they're young, so by the time they come out, that hopefully, and I've shown you the graphs of what happens over time. So yeah, it doesn't matter all the dips and downs. Yeah, so it's average pound cost averaging. We're not putting huge sums in. We're just putting in, every month, automatically comes out of our account, goes into their account, and that's it, basically.
Yeah.
So that's another way of investing. There's so many different ways of investing, depending on. I think you need. What my advice would be to most people, right? And this is where most people want to get into. I want to trade. I want to trade. I want to make loads of money, right? My first thing would be decide where you want to go.
Yeah, that's 100%. 100%.
So it's more about mind management.
Yeah.
It's not about just trading, picking up a button. It's
no, exactly.
What do you want to achieve? Where do you want to go? When? Right?
Yeah.
We do that in property. When I'm a mentor, I need to find out. And then once you decide, I want to do this, right? Then you can just say, okay, and automatically things will happen. And you say, well, that might be good for that because you've already got clear in your head.
Agreed.
What you want to achieve, right?
Agreed, 100%. And I think that is exactly why, like I was saying, the reason why my style is like that is because I've got this plan mapped out of where I want to be at a certain point next year, then what I want to invest in alignment with exactly what I want to achieve. Does that make sense? So I 100%, I relate to you on that, 100%. Definitely.
Yeah. So it's different, right? But I had actually 2 people reach out to me, and I haven't got back to them because I'm trying to get in my head how I want to help them. Not how should I help them? What should they do? Because everyone wants to do trading, but maybe trading's not for everyone.
Yeah, exactly.
Maybe
it is true.
Doing a bit
it's
of
not for everyone.
rather than trading, right?
Yeah.
Do you want to sit in front of a screen all day?
Yeah, exactly.
Don't believe these guys who just boot up the laptop and go, on the beach, I made 5 million, man. Look at the wonder. Bullshit, right? You can make it. Trust me, you can make it. Right?
Yeah. Just
you can
not
make
like
it.
that.
You have to take a lot of risk.
Yeah.
But you can lose it straight away within a nanosecond.
Within a second.
So I'll give you another trading style. I like sharing stories with you, so let me share.
Go for it.
Do you remember that book I recommended to you?
I don't remember the name, but I do remember.
Yeah, it's called The Total Traders.
That's it. Yeah, Total Trader. Yeah.
Right. So I read that in 2005, 6. No. Yeah. And I followed that book. I made a ton of money. When I say a ton, in 4 weeks, I mean a ton.
Yeah. Wow. That facial expression should say it to tell everyone everything.
250,000, right? In 4 weeks. Right?
Yeah.
And that was bang, 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 right? Yeah. Then I reversed it because I thought, do you know what? It's overcooked. This whole thing is overcooked. It's overcooked. And I stopped following my principle, and instead I shorted the whole bloody market at 2 million. Because I thought I was unstoppable.
That's what happens.
Like, listen, but this is experience, right?
Yeah, it is.
I'm a different character now. Right?
Yeah, exactly. You learn.
I gave it back. I gave it back within 2 days.
Mad.
Right? So what I'm saying, the moral of the story is, you can make a lot of money, if it's done right. But then I think you need head management. I was a lot younger. I wanted to take risks. So I was a different character that I'm now, right?
Yeah, 100%. It's a lot of psychology.
These experiences have led me to know what I want to do.
Yeah.
With hindsight, I should have actually closed that position down and just gone on holiday.
Yeah, exactly. Yeah.
Most people have gone, that's me done. Thank you. That's me done. I'm gonna go.
To be honest, to be fair with you, I think most people would have done exactly what you did. I think the smart.
Thank you. You're making me feel better.
No, not to say not to say you weren't smart then, but I definitely think the smarter investor and the experienced investor would have walked away because an investor or a trader, should I say in this case, a professional trader knows when to walk away from the market. Yeah. Like if you have a loss, you walk away. You come back tomorrow, the next day, you look at another setup. You don't go in trying to make back what you lose. And the same thing is when you win. A good trader knows, okay, that's it. That regardless of whether your price is here and the price continued to here and your take profit was here, you just leave it at that. Doesn't matter how much the market's going to shoot up more. Yeah, like and it's psychology, and that's why it's a big part of trading is a psychology, and that's why
it
it's
is psychology.
Yeah,
It is very much psychology. It's
it
very
is.
much, but you know, I'm a different character now.
There you
So
go.
that
You learn
happened.
from
I
that.
wouldn't do that again. But I took a lot of risk. You know, that's what I'm saying. I took a lot of risk on the other side. And you know what? The funny thing is, I was absolutely right. But I had to close it down because I leveraged it X and I 10 leveraged it again. Right? So then what happened was because I thought, do you know what? They've overcooked it. I would have made even more money. 2 days, I think it was 2 days or a day after, I had to close down I closed down the position because the position was so big that the money that I'd made was just disappearing like that. And now I was almost negative. In fact, I might have actually hit the negative button. Yeah. I was thinking, done, you know, come back in 2 days, right? No. Close it down because this is just far too big. I was absolutely on the money. Day and a half later, it collapsed. It collapsed. Yeah. But had I actually gone, I'm not going to double, triple, 10x the position. I'm actually going to come back in and start shorting it at this level, but at this sort of price, right? And I'm going to risk it all. I'm just going to risk a little bit of it instead of, well, actually, I'm going to 10x it.
Yeah.
So now the position's even bigger.
It's bigger, yeah.
And it's going, and you're thinking, shit, why didn't I just stay on that trade?
Yeah, exactly. That is what you're left thinking.
You're living low.
Yeah. Cool. I think this last question, wrap it up. It's another entertaining.
Yeah, sorry, mate, if he's gone on too much.
No. I think we are over an hour, but this is how long this live was going to be anyway. So I think it's just as fair as we
wake up. People wake up.
Those questions. I'm pretty sure they'll all be intrigued. So for sure. Yeah. This last one's interesting, and I'm quite intrigued with what you're going to say on this actually. Okay, if you had 50K, and I think we'll both answer this. If you had 50K, would you invest it in stocks, property, or cryptocurrency right now?
Oh, yeah, okay. If I had 50K right now,
yeah,
would I invest it in stocks, property, or crypto?
Yeah.
Right. I would probably do a bit of stock, a bit of gold, and a bit of crypto.
Nice.
It wouldn't be in property.
Yeah. I think literally same here, to be honest. I've got stocks. I know certain companies that I would definitely put it in. Yeah. Gold is a big one for me right now, 100%. Yeah. And crypto. So I'm literally exactly the same as you. Yeah. And again, some crypto. I think let me elaborate a bit more on that in terms of percentages. I would do 40% in stocks.
Yeah. Yeah.
I would do then I would do 30% in gold.
Yeah.
And then the rest in crypto.
Yeah. Yeah. See, with the gold, the gold price at the moment is just going mad, right? The reason why it's going mad is because the funny thing is it's an asset where this doesn't make sense that the price determines, the actual market, which is manipulated, determines the price of the solid asset, rather than the asset and the supply and demand
determining the price. Yeah, exactly.
But it doesn't. It just doesn't work.
Doesn't match, yeah.
Right? But in corn, sugar and stuff like that, where farmers they do it all the time.
Yeah.
And it's mad. It's mad. Yeah. And silver is the same. Yeah. But I would, but the gold would be as a hedge to not inflation, this fiat system that we're in, and crypto will be for the same reason, right? That this fiat system that we're in, right? But it would be a combination of gold and crypto, and then obviously shares.
Yeah.
Yeah, it reminds me. Just one more. One
Yeah.
more graph.
Go for it.
You reckon? Or is
Yeah.
that too much?
I think one more graph will be a good way to wrap it up. So
Okay. So let me ask you one thing.
okay.
Do you remember Venezuela? Do you remember what happened there?
Yeah.
What
I don't
happened?
remember. I don't remember exactly what happened, but yeah, with gold you're referring to.
Yeah, not just gold, but silver, everything.
Yeah.
Because Venezuela printed so much bloody money,
Yeah.
right? It
Yeah.
was worthless, right? So I'll
Yeah.
show you something. Do you know what Venezuela did?
Make sure you share your screen again. Remember.
Oh yeah, hold on. Well, let me find it. Yeah, let me find it. Hold on. Yeah, I think. Right, hold on. Okay, so this is the price of gold, Venezuela, because it went. So can you see what happened to the price of
Yeah.
gold?
Yeah.
Is their currency devalued, Kiki?
Yeah.
Their currency could totally devalued,
Mm.
right? And what I'm worried about is when our currency, because we're printing so much money,
Yeah.
if it, I'm not saying it will, but if it devalues, then this is what's going to happen to gold. If, and I'm saying if, right? That's it. Yeah, I haven't got the other one, so it's fine.
Yeah. That's
Yeah.
cool. No, definitely makes sense.
Yeah. So that's the main reason why that I'd invest in. Just
Yeah.
I just need a little bit of security.
Yeah. 100%.
Yeah.
100%.
So I hope you've enjoyed it.
Yeah. So
Even though
again,
we
thank
had a
you.
big cock up.
Yeah.
Sorry about it.
So we'll make sure.
Yeah,
We'll
I'm going to
make
come
sure.
and get you, mate. I'm going to come and get you. See,
Is that a water gun or a Nerf gun?
what do you mean Nerf gun? What the hell's a Nerf gun?
Nerf guns are there's the darts. You know the plastic darts.
Yeah, that's much better. No, this is a water gun.
Oh, okay, fair enough. It's a substantial water gun,
Well,
to be honest.
I like the advert that you put out last week.
Yeah, that picture.
Oni, I'll be back.
Yeah, literally.
Actually,
But
today I was going to get my lightsaber because I've got my lightsaber.
you got lightsaber. Well, I think let's do a relevant one, and then we'll get the lightsaber in.
Yeah, that's
get
a
the
good
lightsaber
one.
in. We'll have props.
Well, so who are you going to be? Am I going to? I know what you're going to say. I'm going to be Yoda.
Yeah. You're not really. Yeah. So
Okay.
that character's taken.
I hope you guys have enjoyed it.
100%. Yeah. No,
Enjoyed
definitely.
it. I bet you laughed, don't I? Really? Yeah.
Yeah, exactly. You do. It's a good laugh. No, thank you so much, obviously, for watching this video and sending those questions in. But again, if you have any questions, and I know people would have had questions on the live, please drop them in the comments below, and we will get them answered. Don't think we're gonna leave you. We're gonna answer them and make sure you've got all this stuff answered. But we do hope the questions that we had helped and gave some insight, gave some extra insight, and of course, we hope the actual topic of the whole live video now was actually insightful. So I definitely thought it was when Martin shared it with me. So I hope it would be great to get your views. Let us know in the comments below.
Maybe they've got some good ideas.
Exactly. If you've got any
sharing
crazy ideas or anything, really, let us know. And if you want us to cover anything, we are here. We will take on the topics, and we will definitely, because if it's what you want to hear, we will bring it to you 100%. But apart from that, I just want to remind everyone, please continue to like, subscribe, and hit the notification bar. We definitely want to be getting this. I would say the video views are going up, which is great, but we want to get them more.
I think 2,000. Our target should be 2,000.
Exactly.
Now, right?
Exactly.
2,000, and Kiki will shave his beard.
Okay.
I remember that time that you had that moustache. Can you remember that time you had? In that photo, you got that moustache, but you're not doing it anymore.
Hold on, mate. Hold up.
There you go. There you go. That's Punjabi moustache, mate.
Yeah, no, definitely. If we get 2,000 views on one of our videos, I will shave my beard on the video. Like whilst we're talking, I will actually shave it whilst you're talking.
Good.
Yeah,
I'd like to see that.
2,000 views and I'll do that 100%.
I hit the like button 200 times, but you can't. You can't do that. Can't do that.
YouTube will detect you, mate. It's smart.
Yeah, I know.
No, but again, you know, like we want to grow this community. We want to be able to help as many people. So it is, you know, like share this with your friends, with your family, anybody's interested, even in investing, even if they're newbies or they're completely experienced, please do share this with them. But apart from that, I hope this was insightful. We hope, you know, unfortunately, again, with the all mess up, we will definitely be on live next time when we do our next live. But I hope this was insightful nevertheless, and you got everything that we was going to get in this live. But yeah, I just want to thank you so much for watching.
Definitely. Yeah, we're grateful to you guys because you make the channel, right? Our audience make the channel, and we're grateful to them. Without them, we wouldn't be doing this, basically.
Exactly. So yeah, so apart from that, I think, is that all, Martin?
Signing off.
Cool, signing off. Until next time.
Take care, guys. Bye.
Bye.